We're going to continue our coverage now of Federal Reserve Chairman Ben Bernanke's speech today at the Fed's annual gathering in Jackson Hole, Wyoming. Joining us from his office here in New York is Dean Maki, chief U.S. economist for Barclays Capital and a Bloomberg best economic forecaster. Dean, welcome back to Bottom Line. Always a pleasure to have you on.
Thank you for having me on, Mark.
Dean, last year during his speech in Jackson Hole, Chairman Bernanke laid the groundwork for another round of bond purchases. Today he did not, but he did say that the Fed September meeting will be 2 days instead of one. Was that a hint, and were there too many expectations for Fed actions ahead of his speech?
I think there was too much anticipation of a potential action being announced by Chairman Bernanke today. This isn't really the forum where the Fed would announce a major policy shift, and we did not expect that. What is interesting, as you mentioned, is this two-day meeting coming up in September. I think what that signals is the Fed has not made up their mind yet, both whether and what to do next. And I think that that's the signal we should take away from it. They want some time to discuss all of their options and under what conditions they would move.
And speaking of options, Dean, Chairman Bernanke did say the Fed still has stimulus tools left, but he cautioned, quoting here, the threshold to utilizing them is going to require fairly different conditions than what we have today. What tools, other than a third round of bond purchases, does the Fed have left, and what are the conditions under which the Fed would take action?
Well, the Fed does have several tools. One of them would be to lengthen the maturity of the Fed's holdings in an attempt to drive down longer-term interest rates, which are what determines things like corporate bond yields, mortgage rates. So the Fed could try to do that without increasing the overall size of their portfolio. The Fed could also cut the interest rate on excess reserves. We don't think either of these would have major effects on the economy, but they would show that the Fed is doing something.
The Fed's preferred inflation gauge, excluding food and energy prices, it did rise 1.3% for the 12 months ending in June. Inflation has risen, but it is within the Fed's target range. What will that gauge look like if the Fed implements a third round of bond purchases?
I think that's one of their concerns. Overall inflation, if we look away from just core, is actually above what the Fed is comfortable with. Now, core is rising. It is moving into their preferred range. But I think one of the things holding the Fed back here is that they could, through another large-scale asset purchase program, potentially push inflation well above where they want it to be.
Dean, Mr. Bernanke suggested today that the Fed is exhausting what it can do, and now perhaps it's time for that ball to be kicked over into Congress's court. Do you agree?
I think that is correct. There isn't a lot the Fed can do to cause economic growth to grow rapidly. And many of the problems the economy faces are more structural in nature, and those are problems the Fed can't necessarily address that would require something on the fiscal side.
Dean, in our last minute, Bloomberg senior economist Joe Brusuelas, today he made a wonderful distinction in his note. He characterized part of Chairman Bernanke's speech today this way, quoting here, this expression of confidence that European policymakers fully appreciate the gravity of the financial crisis they are facing was quite interesting. Perhaps it is Jean-Claude Trichet on Saturday and not Bernanke that will provide the defining statement of the conference. What might that statement from the head of the European Central Bank be tomorrow, if any?
Well, we wouldn't expect him either to say something decisive about new policy initiatives, et cetera. That would require the whole ECB to get together to make a policy shift. At best, we can expect something from him on where he sees the outlook and where he sees things going.
Dean, in our last 30 seconds, I have to ask you, absent any action from the Fed or Congress, does this economy have the necessary tools for growth?
We do think that it has the tools for growth. It isn't set for rapid growth by any means, but we do think in the second half of the year growth will be a bit better than in the first, as some of the temporary factors that have been holding growth back ease.
Dean Maki, chief U.S. economist for Barclays Capital, a Bloomberg best economic forecaster, joining us from his office today here in New York. Dean, it's always a pleasure. Thanks so much.
Thank you.